With regards to the uranium market, it has a lot to do with how you see the market, how you see yourself as an investor and speculator. We talked in the Rule classroom here 3 or 4 months ago about the amount of hate that the junior uranium sector was experiencing and how there was a real good snapback trade coming. If you bought the junior uranium stocks as a consequence of the fact that they were oversold, you're up 30, 35, 40% on your money. If you're a trader, you might want to take some off the table. If you bought because you were expecting a snapback, and by the way, I bought expecting a snapback, the stock that I bought expecting a snapback is in the process of being sold as we speak. The majority of my own uranium shares, about 80% of my portfolio, I'm likely going to own for 4 or 5 years. I see the structure of the uranium business fundamentally changing. People who are interested in uranium, by the way, should revisit the uranium boot camp that we did. Yes, we did it several years ago, but 95% of the information in that boot camp is extremely timely today. What is changing is all beneficial, and that is this. The structure of the uranium business is changing from a spot market where prices between buyers and sellers are determined in an overnight market to a term market where prices are set contractually for periods as long as 20 years, adding certainty to both the buyers and the sellers around the quantity of uranium traded and the price at which it is traded. This certainty allows smaller companies that wouldn't otherwise be able to finance projects into production to, in fact, finance those projects into production because they can use the contracts with credit grade counterparties to reinsure the banks and the lenders about the stability, at least, of their revenues. It also allows lazy securities analysts, guys like Rick Rule, to be able to forecast top line revenues much more accurately and to be able to forecast margins more accurately than they would otherwise be able to the extent that we have access to the information in the term contracts. That's a very long-winded way of saying if you are a trader and you bought the uranium because it was hated, you might want to take some money off the table. If you're an investor, there's much more to come.
Rick, did I hear you correctly say 80% of your portfolio consists of these stocks?
80% of my uranium portfolio.
Okay, thank you.
No, 80% of my uranium portfolio.
Yeah, thank you very much. Okay, question coming in from Cohen about Meridian Mining. Seems there was a recent feasibility study, Rick. He asked, what's your opinion on the metal price assumptions in that study and your current ranking for Meridian?
I haven't had a chance to review that feasibility study, so I have no opinion.
Okay, from Zolt, is Ivanhoe Mines a contrarian opportunity now?
That's a wonderful question. Albert, as you know, I threw out an invitation today to Robert Friedland to come on the classroom. He decided not to do that as a consequence of some pending news at Ivanhoe. The problem is serious. There's, underground seismic stability issues. We don't know anything right now. We do know that the company made the right decision, which is to say they evacuated all their workers from the mine, putting human safety above near-term profitability. We don't know anything about this. So in the near term, we can say nothing. The market's reaction has been vicious, selling off 30, 40%. I would remind investors that this deposit has a 40-year mine life, and a resolution of this problem likely takes place within 6 to 9 months. If you are looking at the deposit the way I am, which is to say receiving revenue from it from the rest of your time on Earth, what you try to determine is the period of maximum pessimism. I don't think we're at the period of maximum pessimism right now. We've had a pretty good shake, such a good shake that they are diverting capital and people to the Kamoa side of the deposit. And they're experiencing flooding now in the Kakula side of the deposit. So after they determine, or concurrently with determining the nature of the seismic event, they're going to have to dewater the mine, even while they worry about how to shore up the pillars and the roof. So this is a situation that won't resolve itself for at least 6 months, I would suggest. We may know how we're going to resolve it, but we won't have it resolved for 6 months. So there's lots more time for Mischief. I will almost certainly be adding materially, I mean really truly materially, to my Ivanhoe position. What I've learned is that when there are one-off events that cause the price of an asset I want to own to decline precipitously, at some point in time I need to act if I believe that they're one-offs. I believe that it's likely that the underground development at Kakula was too aggressive, that they made very aggressive assumptions about the stability of the deposit and the size of the crown pillars that they needed to make to hold up the walls, which is to say, I believe they probably removed too much material and didn't use enough, if any, backfill. And I believe that in the future, as a consequence of that, that mining costs will have to go up, that you'll have to spend more money on support, that you'll have to leave more ore in place, that you will have to put more material back underground as paste, as fill. And I don't have any reason to say this, except the fact that I've watched circumstances like this over the last 40 years, and that's usually what happens. This is one of the best copper deposits in the world. This is the highest grade big copper deposit in the world. Has a long way to go. There's lots of exploration upside. I suspect that this is a one-off event, but I don't suspect that this is a one-off event that has already caused all the mischief that it's likely to cause.
Yeah, that is the nature of engineering, right? You push aggressively and then you pull back when you've gone too far. Rick, you mentioned about not being at the state of maximum pessimism and that you want to add to your position. But I would imagine that trying to pick the point of maximum pessimism is like trying to pick the top. So how do you approach this? Do you approach this any differently? Like, shouldn't you be averaging in or something like that? How are you going to?
First of all, I assume I'm going to get it wrong. But when I start seeing lots of analyst reports recommending a sell, that'll be a good sign. Bernard Baruch famously said, the only guy who bought at the bottom and sold at the top was a liar. It didn't happen. And I will miss the bottom, almost certainly. I'll buy too soon or I'll buy too late. But you don't need to get the tops and the bottom. You just need to cut a big fat slug out of the middle. And that's what I hope to do.
Okay. David's interested in silver, wants to know about two names, Discovery Silver and Avino Silver. Just your comments and if a rating, if you have one.
I own Discovery Silver. I have Discovery as a 5 as a consequence of recent market strength. Discovery Silver is becoming less of a silver mine and more of a mine developer. They had an interesting silver deposit and have an interesting silver deposit in Mexico. But what attracted me to the company is the track record of success around mine building enjoyed by the management team. I've known them for 30 years, watched them build a lot of value at various places. Very recently, of course, Discovery Silver, backed by Albert, our old friends at Sprott Capital Partners, SCP, and others, bought a mine in Ontario as part of the Newmont disposition. And they have vaulted now, or are in the process of vaulting from being mine developers to mine operators. The idea being that they will utilize the free cash flow from the Ontario operation, to pay down the debt associated with that, but also to fund the Mexican asset in production to grow the company over time. With a lower quality management team, I would probably be nervous about serving two gods, trying to do those things simultaneously. I have known this team for a very long time, and I think it is a good speculation as opposed to a certainty that they'll be able to pull this off. I also am a believer in higher gold prices and later higher silver prices, and I suspect that those will inure to the benefit of the company. With regards to Avino, I know it less well these days. My criticism of Avino was always that it was a high quality mine, but a small mine. And I have a prejudice against small mines. Both big mines and small mines have big risks, but small mines make you small money. Well, big mines can make you big money. And I like pro forma to take big risks in return for big rewards. The Avino people have been in Mexico for a very long time. I've known the Wolfen family for almost 50 years. They have been operating in Mexico for almost 50 years. They know they're part of Mexico very well. My understanding is that in addition to the legacy Avino mine, which, by the way, has been in production since the 1500s, that they have 4 other projects that they have acquired that they would like to put in production in the next few years. When I have a chance to get to know Avino better again, it may be that I'll be able to overcome my objection, my small mine objection. But at present, I don't own Avino. And at present, I have it as a 6.
All right, Rick. I want you to elaborate on that a little bit. All rules have exceptions. So the exception to the small mine rule would be what?
If there is enough operating synergy between the Avino mine and the mines that they're going to put in production, as an example, common processing facilities, where 3 or 4 mines put together, 3 or 4 small mines equals 1 big mine. Um, Small mining per se is very tough. I have probably invested in it or speculated in it 15 times in my career. I made money with Glamis. I somehow conspired to lose money with Mandalay, which is tough because the stock did very well. I just traded it poorly. um, but you know, the fact that I've had so few successes in 10 or 15 tries, that tells me that I'm better off staying with my own mantra.
Right. But this sort of cumulative benefit could occur as a result of an M&A, right? Anticipated M&A.
And you know, a lot of other people aren't troubled by that. In a bull market, all ships rise. And it might be that the generalist investor, when he or she comes into the precious metal space, doesn't care big mine or small mine. They are looking at production, they're looking at margin, or they're just looking for a narrative. It is very true that in the later stages of a bull market, the lower quality companies do better than the higher quality companies. I've learned for myself that when that begins to happen in spades, it's time for me to exit the space, but that's a different question.
Right. And if you're interested in that paradox, I think Rick and I have had discussions about that marginality in the classroom in many videos. Rick, interest online in Cerro de Pasco. Jay wants to know, is this a 10-bagger opportunity? Antia asks, what is your opinion of the management?
Well, first of all, I own Cerro de Pasco. I've known these people for a long time. One nervousness I have is that this team isn't as experienced in South America as I would prefer, although they are experienced in South America. Cerro de Pasco, for the people who don't know, is a historic mining district in Peru, one of the 10 biggest silver mines by cumulative production in the world. And the new incarnation, Cerro de Pasco, a Canadian listing, proposes to retreat the tailings from 500 years of silver production. The silver contained in the tailings would make it one of the largest silver resources on the planet. That's the rock that's left over from prior processing. Interestingly, you don't have to mine this stuff. You basically dredge it, regrind it, and take out the silver that the Spanish missed. This project hugely leveraged to process and technology and hugely leveraged to the silver price. When the questioner asks, could this be a 10-bagger? The answer is yes, as long as you give me access to the word could. This is hugely leveraged to higher silver prices, and this is also hugely leveraged to management's ability to handle grade and metallurgical variability in the tailings deposits, where the deposits themselves aren't homogeneous enough that you can understand them easily. There are tailings recycling operations, in particular in South Africa, but also in Chile, that are horrendously profitable. I mean, ludicrously profitable. I'm hoping that Cerro de Pasco is one of those. If it is, given the size of the contained resource, a lot of money can be made, but a lot can go wrong.